All right, good morning, everybody. Happy Sunday. Sorry for the delay. A little bit of a issue. Zoom's having one this week. They had a full meltdown on Wednesday, like nationwide. We should look at the stock and see what the reaction, if there is anything. Anyways, but you should be hearing my voice. You should be seeing my screen. You should be able to chat with me and with each other. Let me know if that's not the case. Good morning, Kami. Good to see you. Good morning, Keith. Stephen, good to have you. Corrine, good to see you. Good morning. Good morning. And Greg. Corrine, I think I said hello like the other day. Did I say hello as being new? Your name seems new. I love your name, by the way. New this week. Love it. Glad to have you. Welcome to the group. Please feel free asking questions, making comments as needed. This is our favorite day. This is my favorite day because we're 2 days out from our risk that we managed last week. We've got a day before we have to get back into it. This allows us to be very, very objective in our analysis, right? We get to assess the market. We get to process the uh, the week's events and news so that we have a sense of what we want to do with it. All right, let's jump in. I think I hit the record already. Did I not post Friday, John? Usually it's 2 hours. I thought I posted that. Let me go look. Oh, um, yes, I did not post Fridays because it was a non-market day. That's what happened. I will post it. On market days, it was because the market was closed. It was only a couple of there was only a couple of us there actually. I guess Glenn had more people in the morning on uh on Friday morning, but I only had a couple of people, so we just sort of chatted a little bit and then we called it early. And so let me it may not be worth posting, but to your point, and for anyone who wants to know, what I'm going to usually do on the Sunday, Monday, Wednesday, Friday, main sessions is process those and post them typically within 2 hours. You should get an email with the link. I post it into Circle also with the recording. So there should be a couple of different ways that it notifies you. But yeah, let me look into that one and see what it says. Okay, officially, good morning. Welcome to Sunday Market Insights. My name is Scott. I'll be your host. As always, please remember that our subscription is for education and illustrative purposes only. Nothing we do is intended to be a recommendation to buy or sell any financial product. We're not brokers, we're not advisors, yada, yada. Okay, so what are we going to do today? Let's talk about market posture. Um, we'll score it, we'll reflect, we'll talk about what needs to happen for it to get better, for it to get worse. Um, we'll look at the um, economic calendar. We'll see what news we have and what's upcoming. We're right on the cusp of earnings right now. Uh, Sector searching. So we're looking at sectors. And watch list maintenance. Okay, let me just make sure. This is going. Okay. Let's dive in. Sorry. Everything's running slow for me on a Sunday here. Okay, charts are up. Let's make sure I had to sign back into them. Okay, charts are good. Let's see. Where's the posture? Okay. And if you're new or relatively new, remember that all of the resources that you see are available and uh, able for you to be downloaded from the Circle site. I can certainly show that, but let's posture. Let's talk about it. Where are we? Where have we been? Where do we think we're going? So we've had 2 straight weeks in this -2.5 area. And we've had no real signs of recovery up until now. So let's just see if we have anything else. Let's orient. Our long term is barely holding on at 0.25. That was for quite a while. That's one of our most um, consistent elements. The short term is slightly negative, volume is flat. Major market got real bad. VIX got real bad. Sector rotation's not doing great. Here's where we are, -2.5. Kami says at least the next 2 weeks. I'm gonna agree. It's maybe a lower test. Maybe we, but mostly chopping around in this area. Um, and that might be best case scenario, right? Worst case would be if the bear market accelerates. Okay, so let's just talk about it. Got so many charts open. Let's make sure everything's working here. Okay. Nope, that's the log. Let me get to the posture. Coming in at a 0.25, and you can see it was this was the big one. Where's my drawing tools? This week, 2 weeks ago, right there, that big red candle. That's what dinged us -0.5 point. Um, and you can see that since then we tested lower on the open, right? We opened the next week lower, but we regained a ton of that back, more than half. In fact, we tested all the way back to the top of it, and then we opened a little higher, and we're just right back down, right near the midpoint, actually, of that red candle. So when Kami's like, "Yeah, I could see it chopping around," I agree. You can see just kind of this range that it could chop in very easily, right? Where it's like boom, 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 boom. And at the end of all of it, you're still in that same range. That could be who knows. And this is the weekly chart, but we'll look at the daily as well. Yeah, yeah. If you have any hint of FOMO of any kind, squash it. Nothing's moving anywhere without you. Um, But yeah, let's see if our score changes. The fact that we actually finished almost identically to where this was, no, we're just gonna keep it where it is. I'm at a 0.25. Right now, if I get a convincing like this goes up and turns over, that will carry us negative. If we break this low, that will take us negative. If we just sit in this range for a little while, that's likely to have us um, just sit in this score where we are now, right? Which is uh, kind of neutral. Okay. Okay. Forecast. Yeah. UHC. We'll take a look at that for sure. That's a good point. Let's drop this down to 6 months. So, what do we do with our score here? Left it alone, 0.25, right? That was the big drop from 0.75 to 0.25. And now we're just going to leave it. It's going to leave it. We know what it's going to take for us to want to either move it a little bit higher or score it um, a little bit lower. Okay, let's move down. Let's move this out of the way. We're going to go to short term. For short term, we're going to switch our charts from 3-year weekly to 6-month daily, which is where we are now. And let's get kind of oriented on where we are. Um, yeah, NVIDIA did not help at all, did it? Scoring wise, we're at a minus 0.25. We were actually at a minus zero point 0.5, and then last week it got a quarter of a point back. Why? Where'd that quarter point come from? Whoops, right there. Right there. Um, the uh, FOMO that we saw, that big, huge amount of buying that tells us there is power, a powder keg of buyers potentially just lurking there. And then you can see we went up and then we've this week, right? So that was here. Let's mark the week. 1, 2, 3, 4, 5. So that was to right there. So this week, did we get a higher high? No. So we're not getting anything. Did we do anything bad? No. In fact, as you cut this big candle in half, you can kind of see up, down. Now, we drew this exact picture last week, right? And we said that if we got the turn to the downside out of this area, we'll put a bear trade on. We put a bear trade on. That bear trade looking for a target of down here near this bottom all the way down. Because if it's going to happen, it's going to start now. What else did I say I would look for? That if this thing comes down and starts to stall and not go down, that would be a higher low. So I can have a bear trade on now and have bull trades potentially setting up in the wings on this minor pullback, right? And so that's what it is right now. Where that not this time. Not this time. But the flag, so here is the flag, and here is a lower high. So we can have both a bullish setup with a bearish trade, thinking, well, if it keeps dropping, what? Um, the flag is no longer applicable in that circumstance. And if the flag is no longer applicable in that circumstance, then there's really not much we can do with this. Um, right? But All I need for the bear trade is till Wednesday. One, two, three. Stay underneath this level until Wednesday, and we're good. The flag can be slanting, horizontal. Oh, yeah, no. Most of the time, you're going to see your flags are actually going to be in these kind of consolidative like this. Um, is going to be a typical flag type of a formation. It certainly can be sideways, where it is like this. Um, but as far as the score goes, it's unchanged. You can see we started here, we went up, we pulled back, and we ended here. That was the week. So yeah, unchanged. Okay, so no, I don't want to log off. I do not. So we'll leave that alone. So these two both stay the same, pretty neutral overall, pretty neutral. And you might be thinking, wait, neutral? Yeah, because again, neutral for us, we've had negative momentum. We don't want to be like overtly biased to the downside bearishly and then unequipped and not ready to trade any of the recoveries that we may see. So part of it is making sure that we don't overreact. Um, Making sure that we don't overreact and then find ourselves over trading one side, ill equipped to go the other side. Okay, volume. Let's get to the volume score. For that, we're going to drop down to the 1 month daily. And you can see we we have one piece of volume that's about to fall off, but it's a tie. We don't really care about that. We have one buy day here, one buy day here. That was that remnant where it was like, you remember this was actually tariff tariff reveal day, and then we had that drop. Recovered some of it. Now we're back down, just kind of lurking here. Um, okay, let's count it. I've got one, two, three buying days. I've got one, two, three, four selling days. I've got two ties. I'm going to throw this one out. So overall, I'm just going to think this is a four sellers, three buyers, one tie. That's a zero, actually. That's a zero. Remember, if it was a tie, if it was three, three, and one, tie goes to the buyers. I give the buyers the lean when there's no lean, unless then I would do a sanity check, of course. I have a negative slope. Um, I'm at a zero score with a negative slope. I'm okay with that, actually. I'm okay with that. Um, it's not much of a negative slope. I'm going to leave it as is, the volume score. I'm going to leave it as is. Okay, so let's stop and let's check in. We've looked at trend, long term, short term. We've looked at volume, and we're at a zero. That's the We're at a zero. Now, an argument could be made where someone's like, I don't know, should it be negative? No, that's not, we're not looking for it to be negative now. It's gone negative, right? It's gone negative. It's gone negative since January, right? Let's even say from February 16th, we were still at a 4.75. It was just still kind of hanging on. And then it broke down. And that was our first, like, oh, yeah, no, no more bulls, much more conservative with risk, starting to take more balanced trades, right? And then you can see from there, it's just gotten worse. And then from there, we broke even further, even further. We held for a little bit, then we broke even further, and now we're sitting in these negatives. This market has work to do before we're going to be like, "Hey, let's get back up on the horse." We're picking up a piece here or a piece there, a little bull, a little bit of bullishness on something, a little bit of bearishness on something. We had a gold trade, we had puts, we have a bear call. This week, would I put a bull trade on or two? Yeah, 100%. And you might be thinking, Scott, it's a minus 2.5. Yes, it is. But it's been stable. And I know that when it bounces, that first bounce is going to be big. So I'm willing to put a piece on, to set a tight stop. If I'm wrong, I take my loss. If I'm right, I'll get a good piece because you saw it. You saw it. Here, we know what's lurking. We know what's lurking. If all of a sudden, even though there's a good chance there's some long-term damage already done in certain instances, but if they were to like, really tighten up and put out a solid and clear trade policy that was actually productive, then the market would love it. It would love it. Just hints of things coming out in the market rallies. Buyers were weak even if they had more. Yeah, that's true. Although on this day they were pretty, I mean, you can see on this day they were heavy. On this day, they really lost steam at that point. We haven't seen them here, here, and here. But from this volume, they still have not broken back below the halfway point. So if it holds, here's what's ideal. It comes down here and then it sits like this, and then it starts to turn. And then at the end of the day, I'm putting on bullish trades, holding this support while my bearish trade expires worthless. Maybe it's a little lower than that. Or something along those lines. I mean, look, if I'm going to script it, as well script it the way I want it, right? Um, so okay, questions, comments? Anyone disagree? More bearish, more bullish? All right. Throw it at me. I can handle it. More bullish, John. Okay, fair, fair. I accept it. I'll get there with a couple of I'll get there after this little minor pullback is doesn't do anything else. If it accelerates, then I'm gonna stay a little bit eased back. And if it stabilizes from here, and that's a great point. John Welsh is saying, wait for the VIX. We'll take a look at that as well. Okay. Let us let's go to the next half of the analysis then. Major market, sector rotation, and VIX. Major market. Let me make sure it's loaded. Close this. Okay. On the 200 day, now that we have this in place, who's on top? Uh, the Dow, followed by the S&P, followed by the Nasdaq and the Russell, which is a very defensive looking posture. We move to 133. I see a little discussion popping. I'm bearish. Okay. I'm slightly bearish. That's my -2.5. Slightly bearish. Press. Hopeful for a Fed cut in May. Oof, I don't think that's going to happen. I think that the Fed's like, look, we can't do it. We don't know what the impact on prices is going to be. Um, and what's happening is, they want to address short-term bond and stock market pain with the Fed cut rather than, you know, the policy necessary, which the problem is the Fed's like, look, we can't do it. Inflation is our number one job. So I don't know. It's gonna be interesting. Losing Powell so close to the end of his term or not. Yeah, I mean it's 2026, right? It's like a year and change. I think what it'll be is the political, like, can he or can't he, or do they just, you know, does that become another little bit of political chaos? Mm. Um, okay, good conversations. Corrine says quite bearish. People start losing jobs. There's definitely a concern, and I'll tell you this, Corrine, in our group, and you'll see it here when we go look at the economic calendar. Um, in our group, we pay a lot of attention to employment data. So we look at every week's unemployment numbers. We look at the weekly, or we look at the monthly job openings, ADP, private payrolls, non-farm payrolls. We watch the unemployment rate, and so we pay very close because that is, if that goes, that's the difference for me between a 28 to 30%, maybe 35 bear market and a 50 to 60 percent bear market. So is it a bear market like 2001 and 2 and 2008 because employment is bad, or is it a bear market like 2022 and 2020 because employment actually held up? Um, oh, yeah, sorry, Corrine, I didn't notice that either. So if you were wondering what she said, that's what she said. Quite bearish, losing jobs, tariffs delayed but terrible effect on ordinary Americans. A few months of downside. Yeah, 100%. So I didn't notice that either. But yeah, just to make sure everyone knew what I was responding to. Employment landscapes. I think we're hearing some anecdotal discussions. And you're hearing some people like, oh, I'm like doing, but we haven't seen it yet in the data. Which I don't disagree with you. But I'm definitely, keeping an eye on that and seeing what it says. Okay, so let's keep going. What do we have here? More of the same. The the Nasdaq was okay, but in this place it used to be, this was one place that it was still hanging on. When we drop down to 66, this is our 3 month perspective. More of the same. The Dow is on top. And Karine, if you hadn't seen the video of the welcome video yet, we have a number of video courses available for you to watch just at your leisure. And one of them is Market Posture, where we go through each of these in detail. So I highly recommend you take a look, and you'll see what we're doing with each of these. Like, why are we paying attention? Things like that. They're only like 12 to 15 minute for each one. So hour and a half, you got the whole six. And here you can see the small caps are really in a bad place. That's just, for me, it's across the board. That's as bad as it gets. That's why I'm a -1 on a 1 point scale. Let's just, to make sure that we see if there's any road ahead shifting. Um, that's my plan. I'm getting busted. I'm looking at 100 acres in southeast Colorado. That's where I'm going, you guys, when the time comes. I'm a hobby farm. 22 days. What do we have? More of the same. Uh, there's the Dow. Small caps. Now here's a little bastion of hope. Everything else dropped and small caps went up, right? So from I mean, I guess they all kind of. I mean, they've recovered better than everybody else. So maybe there's a little sign. We'll see. Um, so less impacted by uh small caps, less impacted by tariffs, continuing to be impacted by a lack of interest rates coming down, though, right? And if prices push up and the Fed's like, hey, we may have to push interest rates back up a knock, then the small caps really get battered. Um, Once all the severance are fully paid out. Um, Now my understanding is they're gonna like, do they wait for severance before they take unemployment, or do they take them at the same time? Then that's actually that's an interesting question that I maybe that's clear to some people. I don't know. Do some people, because technically you're unemployed, so you could draw both, right? But some people might space them out and be like, "Hey, I don't know. Anyone know? I didn't think. I thought it was only 4 months. 4 months. Can you not claim unemployment if you are receiving severance? Okay. Or is that on a state by state basis where it's like each state's unemployment is a little bit different? I'm gonna have to have a conversation with ChatGPT when we get done here today, guys. Okay, so like right now, severances are paying, and then once the severance is out, then unemployment benefits would kick in, and that's when you would see it start to ramp up. Okay, okay. Let's go. By way of score, my score is unchanged. Um, -1. Let's go to sector rotation. Government severances. Yeah, and is it more government or more, you know? Yeah, the landscape environment's definitely uncertain. Who's on top? Utilities, financials, staples, and comm services. So we've got two growth and two defensives. And then down here we have energy and technology. Let's drop it to 133. Very much the same type of a landscape here. Financials, comm, and then you've got staples and utilities. So those are the ones kind of hanging on in there. And then you drop down and you've got technology at the bottom. You've got energy at the bottom. You've got materials at the bottom. Let's drop it to 66 days. So it's not like astoundingly bad. We've still got financials and communication services that are just kind of loitering and hanging around. But here we have staples and utilities on top. We have energy, technology, consumer discretionary in the bottom. Um, yeah, it's not it's negative, but I don't see it worse than it was. Minus zero point 0.5. Minus zero point 0.5 to me seems fine. Um, Drop down here. And what do we have? Staples on top, utilities. It's still more negative. Um, okay. Okay. So negative, but not like it's not, the the major market was really bad. This one is kind of bad. That stays the same. I think we're going to be completely unchanged. I think last week was just kind of a gimme. Let's go look at the VIX, which means what? It means we're still right where we are. And you can see that this is very much the same way. Um, very much the same. We're down from this level. Let me get my drawing tools. We're down from this, but we really this this is what was important. It wasn't like, oh, this is all one drop. You can see this is all still one drop. So from here, could we accelerate back up and then have that double bottom and still have a higher lower high off of a double bottom on the market? Absolutely. Or if it was more bullish than this, for those of you who think it might be flagging, it might do something like this. That would definitely be more bullish. If it doesn't go up very much and then rolls over, that's institutions shedding. Remember what drives the VIX is institutional hedging. A lot of people, a lot of institutions hedged, and a lot of them hedged at a horrible time. Anybody who hedged above 40 is going to end up losing on those hedges, 40, 45, right? But that's how it goes for institutions as well. There are definitely institutions who try to hedge, they hedge late, they lose money, and those guys are not going to be institutional fund managers for long. Um, so, um, okay. Questions about that? By way of a score, nothing changed. I'm leaving it alone. We didn't really this wasn't a low, so getting lower than that at the end of the week didn't really do anything for me to be like, oh, let's make our score higher. Um, yeah, okay. Okay, minus 2.5. That's where we're at. The trade that is on. Let's talk about that for a minute. Let me know if you took it. Let me know if you didn't. Um, in it, PJ. All right. Anyone else? Is it just me and PJ riding? Let's talk about that trade, and then we'll go through the whole watch list, so you understand why we did it. This is what it looks like right here. This is what it looks like. Um, that's where it'll be tomorrow. Ooh, you shorted UHC? Short or puts? Of course, right as I pull UHC up, it doesn't want to bring up my charts. Or is it UNH? UNH, sorry. Oh yeah. They got battered, didn't they? Mm. UNH. Um, okay. Okay. What's the thought process? The shorts are, oh my God, also happy Easter, everybody, for those who participate. Horrible. Let me see. 5:30 by 5:32. I went with something new this year. I woke up early and I put a couple of chuck pot roast on the smoker. And then I'm gonna smoke them until they're like, and then I'm gonna get them to like 165, and then I'm gonna cover them in foil, then take them to 200, and then I'm gonna reverse sear them and still put gravy on it. I don't know. We'll see how it goes. Uh, should be all right, right? Smoked meat should be all right. Analyze tab summary. Yes, let me show you that. 5:30 by 5:32. PJ's like, I don't care about your roast. Talk about the trade. I'm sorry, PJ. I'm with you. It's my ADD. Okay. Um, it needs to stay below 5:30, but not tomorrow, right? Not Tuesday, by Wednesday. By tomorrow, I still excuse me. Pardon me. Will still be um up in this, thank you, press. Up in this 534 type area. So what does that mean? So it means that I'm using the Heiken-Ashi. Um, Heiken-Ashi. I don't want it to get above this now, which is 532.38. So we could basically say 532. Let's say 533. So let's move this to 533 for tomorrow. For tomorrow. So risk is about 450 on 10 contracts. What's the gain? I'm looking for max gain. I thought I had a better credit than this. Um, what is this credit? I think I I think it was more like this is seven. I think I got 85 on my live account. What did you get, PJ, for your credit? If anyone else took the trade, what did you get for your credits? If anyone remembers. But I said it's not quite 2 to 1. It was like 1.8 to 1. And that's about right, right? 450 risk, 800 gain, 850 gain, something along those lines. Um, I just needed to get to Wednesday. That's it. Just to get to Wednesday, stay below 430. Expires, keep it, go. If it breaks back up, I'm definitely not going to let it break up and get into this area out here. This is my line in the sand. Oh, you got 116? That's you got way better than me. You smashed it. I think I got 85 or 86. You must have caught it a little late and nailed a good one. So well done on that. Yours looks way better. I'll show you yours. This is yours. Oh yeah, you smashed it. That's a beautiful trade. Your risk is $80. And if you did 10 contracts, your risk is 1100 at this point. Gosh, maybe you should teach the class. That's all I have. Lucky Doug. Hey man, I'll take luck. I tell people all the time, I love when I get a good bit of luck in the mix. No one else took that one. I felt like it was a pretty good trade. If you didn't take it, tell me why. If you're not comfortable with bear calls, I get it. I hope you at least took it on paper. Um, I like to make sure that the trades we put out are trades you guys will be comfortable taking. So give me insight. Um, But let's hit the watch list. Here's the other thing I'm looking for next week. If that bear trade fails, vacation, that's fair. Did you go somewhere good? That's acceptable for an answer. Belize. All right. Very nice. Very nice. Um, Switching to an IRA trade account in the process. Okay. All right. Cancun sounds nice. What broker, Corrine? Do you like your broker? Is it a new broker? Sorry, I feel like I'm super like frazzled today. I apologize, you guys. Let me get my watch list going here. I still like Apple. Let me get off the Heiken-Ashi. I don't want that, but I still like Apple. Boom. If something's gonna take us forward, it's gonna be something that can lead, and Apple can lead. If it breaks the flag, then I'm gonna put a trade on. I'm gonna put a stop underneath here. I'll put a primary target. I'll put a take profit target here, and I'll put a full target here because I know that this move here could happen again here, and I want to give it the full potential because I know that this market has a bunch of just FOMO powder sitting underneath it, ready to blow. We've seen it, we recognized it. We're gonna. I get that there's a lot of nasty things going on. I'm just gonna go by what I see, and what I see is a big recovery with a small pullback. Now, if it keeps pulling back, then the flag's no longer valid and it's off the table. Great, no problem. We adjust. Then we adjust. But that's what I'm going to be looking for. Is going to be things like that. Um, Not that one, right? I'm not looking to catch bottoms. I need to see this doesn't look strong, followed by this. That doesn't look strong, right? Very different than what we see when we see Apple. Do you see the difference? That's same similar types of move, much different in the scope and in the amplitudes. And that's what makes it different. This one I like. I think to myself, not only did it do this, but it's sitting on top of the 50 on the flag. Great. Okay. Anyways, Karine, I wish you would have been with us a little longer because we've actually had a pretty good run. We had a smashing trade on gold, smashing puts on the SPY. Like we've done pretty well the last couple of weeks. We really haven't done a lot. We've scaled back because obviously Apple pre-purchased 80,000 iPhones, 80,000 iPads, and six plain loads. It's so funny. It's just insane. And they do all that, and then he's gonna be like, "Yeah, you know what? No tariffs, actually." And they're like, "Oh, I don't know. It's madness." Oh, we don't laugh, we'll cry. And at least we have each other. That's what we're gonna anchor to through this, you guys. At least we have each other. Bank of America, that looks okay still. It came out of earnings. It gave us a good run, and earnings didn't take it away. Okay, BX. No. Caterpillar, no. Just kind of sitting. Even the things that I was like kind of bearish on are sitting, but that just because they're sitting doesn't mean they're bullish. It needs to be a leader. It needs to be a leader in a leader sector. Technology, Apple. Technology, Microsoft. Big run up, minor pullback. Yes, if it can hold. Let's see about. I'm just kind of skipping around because I'm losing my voice too. I feel like I'm getting sick. Nvidia. I know they gapped, but if they hold and they don't, if they hold here and then they turn, I would still do it. You know I love PLTR. Oh, PLTR is flagging. PLTR is singing a siren song to me. Back above the 50. Makes me want to trade it again. So that's one. Financials. Financials. I would be willing to do MasterCard, possibly. Nope, not MasterCard. Yes, MasterCard. I was like, wait, that chart looks different. MasterCard is looking pretty favorable. Visa's looking pretty favorable. Robinhood is looking pretty favorable. Where's Hood? Robinhood is looking pretty favorable. They all have that pattern that we like. Yeah. And then Amazon. Amazon looked pretty good, right? Amazon looked pretty good. Where are you, Amazon? No, it didn't. I take it back. Where was there a consumer? Maybe it's not consumer. Maybe it's just technology and financials right now. Walmart. Thank you, PJ. Shit, I almost forgot that one. You guys are amazing. I need you more than you need me. Walmart. That is exactly the one. I knew there was one. Thank you, PJ. Boom, boom, boom. Above the 50. That's this. It's got some strength. It's back above the 50. If it's got leadership capacity. I don't want to trade it if it doesn't have the capacity to lead. Like, look at that guy. It's like the one, you know, false start where you're just like, yeah, that person never really had a chance anyway. So uh that's where I'm leaning for some bulls. If this thing drops Monday, Tuesday hard, we'll ride our bear, take our profits, and then we'll look for what's next. If it drops a little, we'll ride our profits. We'll be really starting to orient for some other things and look for bullish entries to see if we catch something. Makes sense? Are you with me? Am I missing something? What are your thoughts? Lastly, as I wait for your comments, Tesla. Let me take a look at Tesla, and let me bring up the trading plan because we definitely got to look at that. Earnings. I was thinking this one's gonna not do well on earnings, but there's so much vol. I don't know. Maybe a 300 bear call spread. I'm thinking about earnings. I don't think it'll gap back above this. I mean, there's so much nasty things developing in Europe with their demand and their sales. And they're like taking people off of production of Cybertrucks and they have all these recalls. It can't be good. Am I wrong? Am I wrong? I don't know. I feel like it's going to tank, but it's got a lot built into it. This will be an interesting one to watch this week. That's on what day? Tuesday? You know what? Let's paper trade something on it. If nothing else. I'll think about it. We'll put it on tomorrow. Is it earnings before or after market? After market. So we have 2 days, but we'll think about it tomorrow and talk about it in the morning. We'll meet in the evening. Let's do something with it and paper trade it. Let's give you let's if nothing else give you that experience. Okay, if you're new and you're not, if you're new, what's struggling? What are your struggles? What are you struggling with? We just finished routines last week. We're moving on to record keeping. I have 2 trade logs available for you, a stock log and a option log. This is the option log. This is what it looks like. It looks like a lot, but I'll tell you, it's not that much when you do it one trade at a time. This one is combined. And when you fill this out, then you come over here to the dashboard, and then you can see all of this great information. Something that I added, you guys, I added this at the bottom, average market posture. So when you fill this out, this said that this period of time, this was kind of a lengthy one, 1 through 25 was from end of March to September. During that time, average market posture 4.66, bullish market. What would I expect? I'd expect to do pretty well. I'd expect to be profitable, have some money. Net profit, good. Kelly, pretty good. Expectancy, pretty good. Then what? Then the next set of trades was from September to February. What was the average market posture? 5.74. Oh, ho, ho. Well, that's even better. That should be amazing. I should make more money in that market. Did I? Well, my expectancy went from a 90% to 180%. Oh yeah, that was much better. Is it because I'm a better trader? No, I had a better market. I accept that. I accept that. I was a genius in that market. Oh, maybe. Then what? And then all of a sudden, this is from February 14th until now. What do we notice? Well, I was 40% right, 48% right in this market, in this period of time, 68% winners. It's not that I did something different. The market was better. Now what? It's back down to 46. But still a good expectancy, still profitable. But what's the average market posture? 0.31. That's what I mean when I say you need to be able to connect to the market so that you can see, was it me? Like, was the market good and I wasn't? Was the market bad and I was good? That's hope. I want you to know that about yourself as well. That's why record keeping is so important. You got to have these numbers. If you don't have your data, you're trading blind. Get the data. Questions, comments, concerns? Well, thank you everyone for your patience in the slow start, and I feel a little disheveled today for some reason, but we got through it. We have a plan. Um, we got through it. We have a plan, and uh, we're gonna execute. So I will see you guys in the morning. We'll see what the futures bring. It'll be interesting to see what the futures bring. And it's always fun to watch the Sunday night futures. You guys doing that? Anyway. So, yes, happy Easter, everybody. Have an amazing, amazing Easter. And I will see you guys tomorrow morning. As always, happy trading.